my name is SYAZWINA binti SRIPUDIN and my matric number is 2023689962. Nestle has been nourishing Malaysians since 1912. The company first established its presence as the Anglo-Swiss condensed milk company in Penang. This marked the beginning of Nestle's long-standing commitment to providing quality products to Malaysia. As the company growth continued, Nestle moved its operation to Kuala Lumpur in 1939 to better serve the increasing demand. This strategic move set the stage for further expansions and development. Following Malaysia's independence in 1957, there was a greater demand for job opportunities and a wider variety of products. Nestle responded by expanding its product range and creating the culinary product division in the mid-1960s, introducing innovation culinary product under the popular Maggi brand. To support its growing operation, Nestle built its first manufacturing facilities in Malaysia. Today, the company operates 6 factories across the nation, employing about 4,600 people. These factories produce over 500 halal certified products, ensuring that the needs of Malaysian consumers are met with the highest standards of quality and compliance. Nestle Malaysia leads across various food and beverage categories with a multitude of well-loved brands such as Milo, Nescafe, Maggi, KitKat, and many more. These brands have become household names trusted by generations of Malaysia. For over 100 years, Nestle has maintained its commitment to halal excellence. This dedication to producing halal certificate product ensures that all Malaysians can enjoy Nestle's wide range of offerings with confidence and peace of mind. In conclusion, Nestle Malaysia Berhad, rich history and commitment to quality have made it a beloved and trusted name in Malaysia household. As a part of the global Nestle group, it's continued to lead in nutrition, health and wellness, nourishing Malaysia today and for generations to come. Ajinomoto Malaysia Berhad commenced its business in 1961, introducing the Ajinomoto monosodium glutamate (MSG) product. This made it one of the very first Japanese company to establish a presence in Malaysia. Since its inception, Ajinomoto Malaysia Berhad has grown into a dynamic food and seasoning manufacturer. The company has successfully marketed various trusted brand names that have become staples in Malaysian household. In 1965, the Department of Islamic Development Malaysia (JAKIM) authorized and officially acknowledged Ajinomoto Malaysia Berhad as a halal food manufacturer. The company has continually maintained this certification, ensuring that its products meet the highest standard of halal compliance. Ajinomoto Malaysia Berhad commitment to a quality and halal standard was recognized at the National Halal Conference 2021. The company was presented with the Best Malaysian Halal Certificate Holder Award in the Large Industry category by JAKIM on 23rd November 2021. This prestigious award highlights the company's dedication to excellence in halal food manufacturing. Ajinomoto Malaysia Berhad offers a range of popular trusted products. These brands have gained the trust and loyalty of Malaysians over the years, reinforcing the company's reputation as a leader in the food and seasoning industry. Ajinomoto Malaysia Berhad has played a pivotal role in Malaysia's food industry since 1961. With its commitment to quality, innovation, and halal standard, the company continues to be a trusted name among Malaysians.
Hi, my name is Amrina binti Azahar and my matric number is 2023232484. Today, I would like to present the liquidity and leverage ratio for the Nestle and Ajinomoto from 2019 to 2023. There are two ratios under the liquidity ratio, which are the current ratio and the quick ratio. Firstly, the current ratio. A current ratio is a liquidity ratio that measures a company's ability to cover its short-term liability with its short-term asset. As you can see in the graph, Nestle current ratio has remained relatively stable but consistently below 1, fluctuating between 0.59 and 0.71, while Ajinomoto current ratio shows a significant decline from 8.12 in 2019 to 1.77 in 2023. As compared to these two companies, Ajinomoto has maintained a stronger liquidity position compared to the Nestle, with a current ratio consistently above 1. Secondly, quick ratio. Quick ratio assesses a company's ability to meet the short-term liability with its most liquid asset. As you can see in the graph, Nestle quick ratio remains consistently low, range from 0.2 to 0.31, while Ajinomoto quick ratio shows a significant decline from 7.33 in 2019 to 1.27 in 2023. Compared to these two companies, Nestle shows a consistently lower quick ratio compared to Ajinomoto throughout the period, and Ajinomoto initially had a significantly higher quick ratio. There are two ratios under leverage ratio, which are debt ratio and time interest earned. The debt ratio provides valuable insight into a company's financial structure and risk profile by measuring the proportion of asset financed through the debt. As you can see in the graph, Nestle debt ratio remained high, fluctuating between 75.61% and 82.38%, while Ajinomoto debt ratio has been lower and more stable compared to the Nestle. Compared to these two companies, Nestle maintained a higher and relatively more fluctuating debt ratio, while Ajinomoto showed a lower and more stable debt ratio. There is time interest earned. Interest earned is a financial ratio that measures a company's ability to make interest payment on its debt obligation using its earning before interest and tax. The time interest earned for Nestle has remained relatively stable between 70.51 and 24.14 over the past 5 years, while Ajinomoto time interest earned for 2023 is 4.34, showing a significant decline from 23.27 in 2022. Compared to these two companies, Nestle demonstrates a more stable and higher time interest earned, while Ajinomoto faced a notable decrease in time interest earned from 2022 to 2023. So that is all for my part. I will pass it on to the next presenter. Thank you.
Hi and Assalamualaikum. My name is RABIATUL Nurain with student number 2023-251-288. I'm going to present about operating ratio and profitability ratio. First, let's start with operating ratio. Average collection period of operating ratio determined the average length of time taken by the firm to collect its debt from the credit sales. We can see from these charts that throughout these years, Nestle has consistently showed a shorter average collection period compared to Ajinomoto, indicating greater efficiency in collecting its receivables. Ajinomoto showed significant improvements over time, but Nestle maintained a consistently better performance. Next, inventory turnover is to measure how effective the firm uses inventory to generate sales. As for the inventory turnover, Ajinomoto consistently demonstrated a higher ratio compared to Nestle, indicating greater efficiency in managing and selling its inventory. Nestle showed fluctuations in this ratio with a significant improvement in 2023, but it generally lagged Ajinomoto in inventory management efficiency. Next, let's discuss on profitability ratio. This ratio is to measure the profitability of the firm at a given level of assets, sale, and investment. Return on asset is to measure the effectiveness of the firm to generate profit with all its available assets. Based on the chart, we can see that Nestle consistently demonstrated a higher return on asset compared to Ajinomoto, reflecting better efficiency in utilizing its assets to generate profit over the observed period. Net profit margin is to measure the after-tax profit per ringgit of sales. Nestle and Ajinomoto had comparable net profit margin over the observed years, with Ajinomoto maintaining a slightly higher margin in some years. This indicates similar levels of profitability relative to revenue for both companies.
To conclude, our examination of several financial indicators over a 5-year period reveals subtle trend and performance disparities between Nestle Malaysia Berhad and Ajinomoto Malaysia Berhad. Ajinomoto consistently maintained greater current and quick ratio compared to Nestle, demonstrating stronger short-term liquidity. This suggests Ajinomoto has a more prudent approach to managing its short-term obligation. On the other hand, Nestle showed a lower debt ratio, indicating a healthier reliance on equity rather than debt funding. Despite a decline trend, Nestle had a higher interest coverage ratio, showcasing its better ability to pay interest expenses with EBIT. When it comes to profitability, Nestle outperformed Ajinomoto in terms of return on asset, an average collection period indicating better profitability from its asset and more efficient handling of accounts receivable. Overall, Nestle maintained a slightly greater profitability margin than Ajinomoto, despite fluctuation in both company net profit margin and inventory turnover. In summary, Nestle appears to have outperformed Ajinomoto in terms of overall financial performance and stability. To maintain financial stability to achieve long-term growth, both companies should focus on strengthening liquidity management, optimizing debt level, boosting profitability, and ensuring effective asset utilizations. While Nestle higher profitability measures suggest more effective use of asset and potential higher returns for investors, Ajinomoto's strength in liquidity indicates a more cautious financial posture. Both strategies have their merits, and the optimal approach depends on the specific goals and risk tolerance of each company. And that's all from us. Thank you for watching.